Benjamin Franklin once said that the only things certain in life are taxes and death. One day we are all going to die. What is not certain is when we are going to die. So there is a certain level of foolishness in not planning for this eventuality. I am 30 years old currently and I only got my life insurance a couple of months back. According to me, this is very late, but at least I have a life insurance right now. If you're a working professional and if you don't have a life insurance, you're probably making a big mistake and you absolutely need to see this video. Hey guys, my name is Jay and welcome to the fourth episode of Money Matters. In this episode, we'll discuss the following aspects. 1. What is life insurance and why is it important? 2. The different types of life insurance. 3. Why is term insurance the best? And 4. The cost of procrastinating the decision of taking a life insurance. Let's start with what is life insurance and why is it important? Life insurance is an arrangement between the individual or the policyholder with the insurance company, wherein the policyholder pays a premium to the insurance company, and in the event of death of the policyholder or at maturity of the policy, the insurance company pays a guaranteed amount called as a sum assured to the family or a nominee of the policyholder. But why is life insurance important? One of my friends was telling me that, Jay, I'm 25 years old right now. I don't have any dependents. Neither do I think that I'm going to die anytime soon. So I don't think so I need a life insurance. I'll think about it later. Well, let me tell you that this statement is wrong in multiple ways. 1. Death is certain, but when it is going to happen is not certain. 2. Today you may not have any dependents, but in the next 10-15 years you might have dependents like your spouse, your children, your parents. 3. Today you may not have any liabilities, but in the future you may have liabilities like a home loan, a car loan, your children's education, or even a personal loan. So in the event of your untimely death, 1. Your family will not have your support. 2. You may be leaving them with so many financial liabilities because you did not plan for it. And 3. If you delay this decision to a later point, it comes at a high cost. We'll see that in a later point in the video. So basically, if you just wind the clock a little forward and play the situation out, you realize that life insurance is one of the most important financial decisions that you need to take for yourself and for your family. Now that we have a basic understanding of life insurance and why it is important, let's see what are the different types of life insurance. There are broadly 3 types of life insurance. 1. It's a term plan. 2. An endowment plan. And 3. is a ULIP plan. Well, let's discuss what's a term plan. Term plan is an insurance plan which is for a fixed duration of time, that is for 10, 20 or 30 years. The duration of the insurance is called as term of the insurance. During the term year, if the policyholder dies, then the family of the policyholder gets paid the sum assured by the insurance company. Simple. If you do not die during the term of the insurance, you don't get back anything. So basically there's no maturity amount. For example, I have taken a 2 crore term plan and the term of my insurance is for 40 years. The premium which I pay is 25,000 rupees per year. My age is 30 now. So essentially, till the time I reach 70 years, I'll be paying the insurance company 25,000 every year. And during this time, if I die anytime, then the insurance company will pay my family a sum total of 2 crore rupees. Simple. So one of my friends said that, Jay, you are an absolute fool. In case you do not die till the age of 70 years, all the premium which you have been paying to the insurance company goes waste. You don't get back anything. You should have either taken an endowment or a ULIP plan, which is much better. Mind you, endowment and a ULIP plan are the worst insurance products which you can purchase. Before I rip them apart, let me tell you what are those. What is an endowment plan? The only difference between a term plan and an endowment plan is that over and above the death cover in an endowment plan, you get a guaranteed lump sum amount if you survive till the date of the maturity of the policy. An endowment plan is what they claim to be an insurance plus investment plan. Well, what's a ULIP plan? ULIP is the unit linked insurance plan which is very similar to an endowment plan, with the only difference that the guaranteed amount is linked to the market. What it means is that this amount is not a guaranteed amount. If the market is up, you get a higher amount. If the market is low, you get a lower amount. Now, if an insurance agent comes to you and says that, sir, I have a great insurance plus investment plan for you. 1, you get a life cover. 2, if you survive the term of the insurance, you also get a lump sum amount. 3, you get loads of tax benefits. Now, this insurance agent seems to be God sent, right? Well, my mom's a maths teacher and she says that if someone's offering you a great deal, Don't believe them at face value. Do the math. So let's do some maths around this and let me show you why is term plan the best life insurance option you can select. So let's compare a term plan and an insurance plan. In option 1 we have a term plan, in option 2 we have an endowment plan. Here the sum assured is 1 crore in both policies. The term of the insurance is 35 years. That is, for me, it is till age 65 years. Premium that I pay for the term plan is 13,000 per annum, and the premium that I pay for an endowment plan is 3 lakh rupees per annum. So, in a term plan, you paid 13,000 for 35 years, amounting to only 4.5 lakh rupees. In an endowment plan, on the other hand, you paid 3 lakhs into 35 years, that is basically 1.05 crores. Now, in the endowment plan, you have an additional benefit that if you survive till the age of 65 years, at maturity, you get 2 crore rupees lump sum guaranteed amount. Now, the insurance agent will tell you, sir, term plan में तो आपका पूरा पैसा वेस्ट हो जाता है. Endowment plan में आपका 1 करोड़ डबल होके 2 करोड़ हो जाता है. इंश्योरेंस प्लस इन्वेस्टमेंट प्लान.
गोलमाल है भाई, सब गोलमाल है.
आपको कोई गाना सुनाई दिया? Let's think financially over here. First point is that for the same sum assured in a term plan and an endowment plan, in the endowment plan you will be paying an exorbitant premium. In our example, it is 13,000 versus 3 lakh. Now, for discussion's sake, let us assume that you have the ability to pay a 3 lakh rupees annual premium. As an alternative, if you take a term insurance and pay 13,000 rupees per annum to get a 1 crore term insurance, and the rest 2.87 lakh you invest as an SIP. If you get a 10% annualized return for 35 years, you will have a corpus of 7.7 crore. Now, if you believe that I don't like investing in the market, it is too risky, you can keep it in a fixed deposit. Even in a fixed deposit at 5%, you would have made a corpus of 2.5 crore rupees. Earlier in an endowment plan, we were getting a 1 crore cover and a 2 crore lump sum amount if you survive till maturity. Now, we are getting a 1 crore term insurance cover and a definite opportunity to have a corpus of anywhere between 2.5 crores to 7.7 crores. So basically, we are keeping insurance in a separate vehicle and investment is a separate vehicle to get the best of both worlds. In our example, for a 1 crore cover of an endowment plan, the premium is 3 lakh rupees, which is very exorbitant and not affordable. So what people do, they will take a endowment plan for a 20 to 25 lakh cover. That is essentially going down a rabbit hole of bad financial decisions. Now imagine if you get a 25 lakh rupee amount after 30 years, do you know what the inflation adjusted amount would be? It would be barely 5 to 6 lakh rupees. Now this is absolute peanuts for your family. It won't even barely cover 6 months of their financial expenses. So if the above calculation was a little complex for you, moral of the story is do not mix investment and insurance. Both are separate financial instruments. So as a rule of thumb, whoever says that I have a great insurance plus investment plan for you, please pick up your money and run away as fast as you can. The simplest, best and the most affordable insurance plan is a term plan. I started my first job when I was 22 years. Now at that time I thought that I don't need a life insurance right now. I'll take it in the next 5 to 10 years when I'll be making more money. And many of you in the age group of 20 to 25 years would be having the exact same thought. Well, basically we are procrastinating the decision of taking a life insurance and that comes at a high cost. Let's see the cost of procrastinating the decision of buying a term insurance. Let's take an illustration and use my example itself. My age is 30 years and I took a term plan for 2 crores sum assured. The premium is 25,000 for a coverage till 70 years of age, that is for the next 40 years. So I would be paying 25,000 into 40 years, that amounts to 10 lakh rupees. Now let's say I had not taken my term insurance now and procrastinated my decision by 15 years. Now my age is 45 years and for the same coverage of 2 crores my premium would be 60,000 rupees, covering me till the age of 70 years. That is for 25 years. So I'll be paying 60,000 into 25 years amounting to 15 lakh rupees. So if I'm delaying my decision, I'm paying almost 5 lakhs higher and getting covered for lesser number of years. Also, God forbid if I were to die at 40 years, my family would not even get a single penny. Now, I mentioned that I started working at the age of 22 years. Let's take the scenario where I had taken the insurance when I had just started my work. Had I taken the term insurance when I was 22, for the same cover of 2 crores, my premium would have been 19,000 rupees. Now, the cover is till the age of 70 years, that is for 48 years. So basically, I'm paying 19,000 into 48 years, which is basically 9.12 lakh rupees. Imagine. So the takeaway here is the earlier you take a life insurance, you get it at a much lower premium, and that low premium is fixed for the entire term of the insurance. So I think for this eye-opening math, I deserve a like on the video. Taking inspiration from a proverb, the best time to buy a life insurance was 10 years back. The second best time is today. If you found this video valuable and found it helpful in any way, I have a small ask from you. Please share this video with your friends and family who do not have a life insurance. Many of us in the age group of 20 to 35 years are unaware about such basic personal finance concepts. It is not our fault. Personally, I was not taught about this at home. I was not taught about this in school, college, or either my B school. I've done my MBA from SP JMR, which is one of the top B schools in India, and even there we did not have a single subject related to personal finance. Through this channel, I plan to learn some of these concepts and share it with you guys. I am very excited to learn something new. Hopefully, you are too. Thanks for watching. In the next video, we'll discuss how to choose a term insurance and the finer details you should consider while making that decision. I'll link it over here. See you soon and thanks for watching.